For someone who spent his whole career in financial services, I honestly think there's never been a more exciting time to work in FS.
That's Jeff Tijssen, leader of Bain's global Fintech business. For more than 15 years, he's been helping financial organizations evolve to the digital era. But this year has even caught Jeff by surprise.
The pace of change that we're seeing today is unlike anything that I've ever seen before. And they're not just building a better version of what already exists. They're fundamentally reimagining the whole financial services industry.
Today on the show, we'll be looking for practical opportunities that private equity investors are identifying and taking advantage of today. From payments to neobanks to the ever-evolving world of crypto. Truly, we'll learn that the financial services world and the fintech world are merging into one.
To me, fintech is financial services. I don't necessarily think there is a distinction or it's a completely different sector.
I'm Hugh MacArthur, head of Bain's global private equity practice, and this is Dry Powder. I want to talk about fintech, which is really a deceptively simple term. When I say fintech, Jeff, what are the sectors that pop into your head that comprise that universe?
It covers everything from payments to wealth to the infrastructural layer. It's fundamentally reimagining how do we better serve customers? How do we really unlock value for businesses? And how do we fundamentally address the brutal realities of customers' lives? If customers would be very happy with the services that they've been receiving from the incumbent players, we wouldn't see millions and millions of customers adopting new fintech solutions, whether that's a neobank or a payments player or a buy now pay later provider or whatever it might be. And therefore, to me, I sincerely hope that a couple of years from now, we're not necessarily talking about fintech anymore. We just talk about financial services.
I really want to go back to something you said that I found quite profound, which is financial services is fintech. And we're on an evolutionary path where these are one and the same thing. But I want you to challenge me on this if you think I'm wrong. It sounds like we're still in the early stages, and it kind of sounds like the second inning of a long, long process that's quite exciting and quite disruptive. And as I think about the private equity world, you go back 20 years, technology and software weren't really a huge part of the buyout space, and healthcare really was a nascent space. And those are two of the largest areas right now for private equity investment anywhere in the world. And I think that fintech is going to be the third leg of that stool as we look forward in the next 10 years. And the amount of disruption, change, and innovation that's occurring is going to provide and is providing a huge number of opportunities for smart investors that educate themselves to make a differential return for their limited partners.
I couldn't agree more. And I do agree that we are only just getting started. Look at neobanks as an example. Many neobanks have only been around for a couple of years now, but they are gaining millions and millions of customers. And that obviously has fundamental implications for the investor community, for the incumbent players, but it also poses a challenge for the fintech community as well, because you've been really, really successful getting to a certain point. You've reached the next stage of your growth, and to what extent can you really work towards sustainable profitability, and to what extent can you really scale your business and expand internationally as well? It's super exciting to see how far we've come in recent years. And it's also really exciting to see so many new fintech businesses popping up on almost on a daily basis. And I do my best to stay on top of everything that's going on in this space, but that in itself is becoming a full-time job, which is obviously a testament to the growth of the sector as a whole.
Have you ever seen a period of investment quite like this in the past few quarters?
Yeah, it's a great question. The whole space has really exploded, to be perfectly honest. I mean, last year was a pretty good year with about $44 billion being invested in fintech globally. If you look at the first 3 quarters of this year, 91.5 billion had been invested. So even 9 months into the year, we've already seen more than twice the amount of money being invested in fintech across the globe. And then if you look at crypto funding growing by over 1,000% year on year, which is just insane. And then when you look at the last quarter, just in Q3 alone, $33 billion was raised, which effectively means was the second highest quarter on record. We're seeing a ton of mega rounds happening as well, worth over 100 million plus. So looking at the space as a whole, the whole space has just absolutely exploded.
It really kind of begs the question, why now? Is this the culmination or the continuation of a a secular trend, or what accounts for this explosion of deals in such a short span of time?
Yeah, I think financial services, unlike other industries, has been relatively slow to really adapt to the opportunities that digital provides. And despite the billions of dollars that have been invested in digital transformation, I think the results have been pretty underwhelming, to be perfectly honest. And areas such as crypto are really heating up and are obviously seeing more mainstream adoption. And then I think another reason is that we see a lot of banks being very active in this space, and many institutions have, of course, set up their own CVC arms with significant capital allocation. And then I think another key reason for me is that we've seen several investors, whether that's a SoftBank or a Tiger, being able to raise huge sums of money, meaning that they're able to deploy more capital and therefore generate more deal flow. And then looking at the financial services sector more broadly, fintech business companies are really tapping into a market that for many years has been vastly underserved or dominated by a small number of players. And markets like Brazil or the UK are probably good examples where both the retail and the SME market has been dominated by 4 or 5 large players who own 75 to 80% of the market. And then suddenly you've got a Nubank or Monzo or Starling or Revolut coming in with a much better value proposition that really allows them to tap into that underserved segment, and therefore being able to gain millions and millions of customers, which historically just hasn't happened.
Well, Jeff, let's take a deeper look at some of these sectors that you were just talking about. And maybe we'll start with payments, because frankly, at least in my recollection with the private equity sector, payments was one of the first areas of fintech that got really hot, starting about 15 years ago, going back even further with some firms. And it seems like that the nature of the payments business is evolving, and we're kind of in version 3.0 maybe, or 4.0 of payment technology and different plays in the payment space. How are you seeing companies radically altering the online payment experience?
Yeah, I mean, let's be honest. For many years, the payments experience has been very clunky, and we've obviously seen an explosion of payment players entering the market in recent years who I think have done a great job at not just providing a better customer experience, but also making it easy to adopt new forms of payments for merchants looking to offer things like buy now, pay later or crypto, for example, as a means to pay. And we actually recently published a very insightful report on buy now, pay later, where we effectively wanted to demystify why are we now seeing such significant adoption, because things like installment lending have been around for many, many years. And I think being able to embed payments into the end-to-end customer journey has just made the whole experience so much easier and so much more frictionless. This is all UK specific, but buy now, pay later transactions reached 6.4 billion last year, representing about 70% year-on-year growth. And over 10 million people in the UK have now actually used the form of buy now, pay later services. It really solves one of the core customer needs beyond just being able to pay for goods and services. And it's digitally native, both online as well as via the smartphone app. But it also shows that they've done a phenomenal job building a customer base. Now they see a lot of opportunity to introduce a variety of other banking services or even become a bank.
And you see this from both lenses, Jeff. You work with the incumbents and you also work with the fintech players themselves. Is this a pure threat to the established financial institutions, or are they finding ways to actually innovate, partner with some of these disruptive startups, or do other things to continue to compete?
Yeah, it's a really interesting question. And having been in the space for quite a few years, I remember the early fintech conferences where all the fintech players were wanted to destroy the banks, and banks were initially somewhat skeptical and then saw them as a threat, and then everyone wanted to partner with each other. And I think having worked with many established financial institutions, they don't just face a massively outdated payments infrastructure that has basically been stitched together over the past couple of decades, meaning that it's incredibly costly to maintain, but it's also really, really hard to introduce new payments features or actually be able to respond to new trends and developments in the market. And I think open banking is a good example where the largest banks in the UK had to roll out open banking. It cost them a significant amount of money to make that happen.
Can you give an example of just how little the basic infrastructure of banking has changed?
What many banks have effectively done in the past couple of years is taking an analog service that they've been selling for decades, and you're offering that through their digital channels. Now, to me, that's not a digital service, that's a digitized service. And there's a fundamental difference between the two. I had to apply for a new mortgage the other day, and it was just such a painful process. And nowadays, that shouldn't have to be the case. To me, I think the real transformation that needs to occur is not just from a technology perspective and really modernizing the stack, but also from a cultural perspective, and is really, really simplifying how the business operates. I mean, there's 100 different reasons as to why it's bloody difficult to do a core banking migration or drive innovation at pace and at scale across the organization. And I've experienced this myself when I work with a number of large financial institutions, that having to go through 26 layers of governance just to get anything done, or the next innovation board meeting doesn't happen until next month, and therefore the next 4 to 6 weeks we can't really do anything because we need to wait for a decision. Like, startups don't operate in that way. And I think, having been a fintech entrepreneur myself in the past couple of years, if this thing doesn't work out, then you're basically moving back in with your parents. I think banks need to spend less time talking and strategizing, and really, really drive hard on the execution side of things. And now, given the rise of fintech players, and given the fact that there is a real threat to financial institutions, I think many of them have really woken up to the fact that we actually need to do something.
That's fascinating. So do you see these startups actually being able to reach deep enough into the infrastructure layer to bring about this type of transformative change?
Yeah, 100%. And there's obviously a number of players who specifically focus on the infrastructure layer. Just a cloud is a good example. I mean, it's just a no-brainer for any fintech business wanting to launch. It has just become table stakes. But I think the more that we could break down the financial services value chain into modular components that I can tap into as a SaaS-based product, for example, that will definitely unlock more and more innovation. And again, that's already happening today. Well, the majority of neobanks in the US, for example, they're effectively still built on top of other banks. And if you and I were to build a new digital bank today, then the building blocks that you and I would need in order to do that are effectively readily available. And that space is evolving really, really rapidly. And I've had the pleasure of building a number of digital banks myself. It just becomes so much easier to build a new neobank or build a new fintech business. And of course, we've done some research the other day. If you look at the cost advantages in the unit economics for neobanks, you're able to operate a cost to income ratio that is anywhere between 30 to 70% lower if you look at the overall cost of running the business. And I do think that's a big fundamental issue that many incumbent players have, is that their cost to income ratio this isn't necessarily sustainable. And then with net interest margin being very, very low, they need to look at the alternative sources of income and existing revenue streams slowly disappearing. And I'm really curious to see how this space is going to play out in the next, let's say 3 to 5 years, because it's also important for neobanks to demonstrate that they are able to work towards sustainable profitability, that they're able to continue to diversify their existing product streams and therefore work towards revenue diversification. And it's also interesting to see several players taking different approaches, whereby some are just focused on their local markets, others are looking to expand really, really rapidly and effectively becoming this global super app that operates in 40, 50, 60 different countries. So I'm really, really curious, but also super excited to see how this space is going to play out in the years to come, and whether or not we'll see an element of consolidation in the market, because I do believe that not every single one of them will be successful and will survive.
Now, Jeff, I'd be remiss if I didn't go back and ask you again about crypto, because there's so much about crypto in the news, and you see data and facts like, Coinbase is now worth more than the NASDAQ and the New York Stock Exchange combined. And you see people tracking the fluctuation of the price of Bitcoin as it goes up and down, and the volatility of some of these other currencies. There are people that are saying this is speculation, this is a fad. There are other people that are saying this is a fundamental remaking of a decentralized banking system that is secure and is going to completely transform the way many transactions occur. Where do you stand on the whole crypto ecosystem, and how interested in it are the clients that you see and investors?
Very is the short answer to your last question in terms of the interest that we're seeing, both from the incumbent clients that we're working with, but then also from the investor community. And we talked about some of the underlying building blocks in the infrastructural layer. Well, that is exactly what crypto is and what it does. I mean, just take international payments as an example, I find it's beyond me that it's 2021 and we're still forcing consumers in various parts of the world to pay an absolute fortune just to transfer money from one country to another. The fees in some countries are still very, very significant. And there are many exciting use cases, both for incumbent players, but then, as you mentioned, I think the likes of Coinbase are doing really, really exciting stuff and showing the art of the possible.
So crypto really isn't evolving the infrastructure; it's replacing the current infrastructure with an entirely new one.
Yeah, I think that's fair, especially if you look at how crypto is evolving at the moment, where again, we're not just building a better version of what already exists today. We're fundamentally reimagining the financial services sector as a whole. And I think that is why we're seeing such large adoption, not just from a consumer perspective, but also from an institutional perspective.
Well, if it can help solve the problem as to why it takes me 5 days to send a payment from the United States to someplace like the UK, then I'm all for it, Jeff. On the next episode of Dry Powder, Jeff Tijssen will describe how leading investors move quickly and intelligently through the fintech space.
The market as a whole, from an investor perspective, has become incredibly competitive.
I'm Hugh MacArthur. Thank you for listening.